in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America. It's also brought to you by Tractor Zoom, delivering insights. Shawn, how you doing today, man?
I'm doing pretty good, trying to keep up with everything. It's been a wild week for sure, and I'm kind of glad it's a Friday, quite frankly.
Yeah. Yeah, it's we need to hit the pause button for a minute. I think and kind of let everyone collect their thoughts and see what happens here, because this week has been, we talk about volatility on here a lot, but my goodness, this is have down 9% stock market one day, and then it makes its way back up 5%, and then it dropped down 7 or 8 times, or 7-8% over the course of the next couple of days. So I tell you what, man, it's been crazy. Commodity markets have done the same thing. They've been up and down and everything in between. So I guess between like coronavirus and Russia and Saudi Arabia trying to see who's a bigger player in the oil business, we've got this kind of stuff going on. So I guess give me your insights about this week so far.
Well, whether we like it or not, governments and people have panicked. Mm-hmm. Once they panic, it's got to run itself out. And so what has happened is the global economy is sort of been shut down. Not completely, but it's really been shut down. And, that's just not easy to handle from the market perspective, because it's, shutting down the global economy is not something that you have in your models of what you would expect are risk factors. And so the government, the Federal Reserve, announced $1.5 trillion of money they're going to put in the system. Trump's coming out saying they're going to fill the oil reserve, and they're going to have payroll taxes, and say you don't have to make mortgage payments for a couple of months. And so the governments are just desperately trying to buy time, because everyone understands viruses come and viruses go. This one will go, just like it's already been receding in China.
Right.
We got it a month later, so we're not there yet, but it will recede. The government is just trying to plug all the holes up that they can, buy some time to put money in people's pockets to keep them going, so that once it finally recedes and they can open up the global economy again, things can get back to normal. And we're still in this, they're trying to put that in there, but they haven't quite done it yet. And panic is still out there, and markets are all over the place. I mean, the VIX index hit 90 this week.
Yeah.
I mean, you look at a chart, the VIX, the 87 crash, 08 crash. I mean, it's not a whole lot of times you get to 90. That's the bad thing. The good thing is when you get to 90, it's really hard to stay there. And so we saw this big rally at the end of the day today, showing that maybe we just have gotten maybe we can't get any more panicky than we did this week. That maybe we just got to calm down just by the nature of it's very hard to stay that panicky for very long. And I'm hopeful that next week we start to get at least a calming of fears, and the market will be operating functionally more normally again, at least for compared to what we just saw, more normal.
Right. No, no kidding. Yeah. So this week, man, I tell you what, it's been crazy. It's been all over the place. I guess let's take a long kind of an outlook here on when I look at what's going on with Russia and Saudi Arabia. I think I'm a little more concerned about that, especially with what's happening in Brazil with the way their currencies go. So these countries like Russia, Ukraine, Kazakhstan, those big areas where they're growing a lot of wheat, and then Brazil now being kind of the southern breadbasket of the world, their currencies are really weak. I mean, they really kind of go, which kind of favors the fact that they're going to see some exports out of those countries, especially if there's some kind of major economic problem with Russia, since overwhelming majority of their economy is powered by energy and oil. So I guess talk about that a little bit with this coronavirus thing and what we see there. I guess what are some of your thoughts about long-term effects on currencies and how that's going to affect some what we would hope maybe some phase one stuff would have handled with China here as far as exports go?
Well, certainly the coronavirus, because it's put the global economy and especially commodities into the big hole here. And countries like Brazil, which are very reliant economically on commodities, and like Russia, very reliant on crude oil and that sort of thing. Um, that's why it's so important to try to backstop what's going on right now to avoid the current panic, the domino effect getting worse. Meaning, if Brazil blows up and we get a 30% currency crash like we see in Argentina all the time, that is very, very difficult to overcome anytime soon. And we need to avoid that. We need to do everything we can to avoid it. How do you avoid that? You have to keep the system going. You have to prevent commodities from crashing further. You have to prevent, the dollar from soaring here because everyone is flooding to as a flight to quality. You have to try to do everything you can to offset that until the virus recedes and things normalize. Because once you trigger that, as you said, then the long-term impacts are very severe. And then what does the trade war mean? How can the trade war be implemented if the currency, let's say the real drops 30% and their products have just dropped 30%? How do we actually can sell to the Chinese when products in South America are 30% cheaper? It's really problematic. I think Saudi Arabia saw an opportunity with the coronavirus to do a takedown in the oil market when they knew oil demand would be under, would be under stress, to try to inflict pain on their competitors and gain market share. I think they know full well the minute the coronavirus falls off, the minute that demand starts to pick back up, that the global economy gets fired back up again, they'll be unable to produce enough oil to keep it in the low 30s. I think they pretty much know that, but they think they had a window to put maximum pressure on their competitors for market share before the price will have to go back up. So I'm not really thinking that this is a long-term price depression. I just think this was a short-term opportunity. It's sad to think that somebody like Saudi Arabia would use this tactic at a time like this. But on the flip side, cheaper oil means that every consumer in the world is getting a fiscal stimulus in some shape, way, or form.
Right.
Meaning, everyone is paying a little bit less for gas, or a little bit less to heat their home, or a little less for whatever it is. So there is some benefit short term in putting that money out in the global economy. As long as it doesn't stay there for too long, I don't think there's long-term damage, but it's definitely something that one would have to pay attention to if it were to last more than a couple of months. So.
Yeah. So this is Bloomberg coming in, and they were talking about how Federal Reserve put out half $500 million, I think, $500 million on Wednesday, another $500 million on Thursday.
1.5 trillion.
Okay, 1.5 trillion. Okay, so they put it out 3 different times. All right, okay. All right, so they got this out there, but the bank take rate is like next to nothing. It's like $100 billion is all they've taken out of that. Do you think that banks are being overly cautious right now because of that, because of what we see happening, or do you think there's just no one coming to the bank right now saying, "Hey, I need a loan"?
Well, I mean, like everyone right now, whether you're in the airline business, whether you're in the cruise line business,
right? Yeah.
Whether you're in the ag lending business, I think everyone is going, you know what? Let's just pull ourselves in here. Let's see what's happening here. I think everyone is just kind of, let's not do anything crazy. So I think for now, that's what's happening. Everyone's being overly cautious just to make sure, just to get a handle on, can we get our hands around this? And is this just going to be a couple of month problem? Because if it's just a couple of months, it's painful, but it's not the end of the world. If it's 6 months or 9 months, it's a serious major problem. And everyone's being extra cautious just in case. And of course, that is, it makes sense to be a little overly cautious right now. But having said that, because of that being cautious, should it look like that things are prying loose and things are normalizing, then that's a big rush to come in and to tap into that liquidity very, very quickly. And that's why you could get a post-virus rally in markets that could be as equally as exciting or as equally as impressive as what we just went on the downside. So.
Yeah. Crazy stuff going on. Let's jump over and take a look at the one market over here that is most susceptible to these swings, and it's the cotton market and how they relate to the different economic stimuluses when it comes to people's just ability to go buy clothes and those kind of things. Talk about the cotton market a little bit and we see happening there.
Well, three important things for cotton. The first thing is cotton competes with oil-based fiber, polyester. And when you get the crude oil market losing half its value, the polyester price crashes.
Yeah.
Cotton has to compete. And so, some people want cotton no matter what, but not everybody. So
Right.
that's a problem. Second thing is obviously, when you think about what do I absolutely positively have to buy, you don't have to go out and buy clothes right away. You can put that off somewhere. I think most people have enough clothes that just keep using it for now and wash them a few extra times. But you don't have to go out and buy clothes, but you do have to buy food, and that's a distinction that means that demand can just go away for a while and it doesn't have to come back. The other issue though is, at some point, who's going to plant cotton? I mean, we got into the 50 cent, under 60 cents this week. At what point do you just say, I'm just not going to even bother doing it this year? I mean, of course, the best ground always gets planted, Casey. We know that. It's the best ground. We'll always take a shot at it. But there's a lot of ground, that Western Texas ground, that, dryland ground, that they say, you know what? Or the bank may say, you know what? We're not doing it this year. And that's a bullish thing if we get the global economy back online, is that they don't plant those acres and the demand actually comes back later on in the year. It could be quite a shortfall. So those are the three things. But right now, demand destruction and competition from polyester prices are really driving the market down, and it's hard to see that ending right now.
Yep. All right. So cattle have had a couple of days of limited or limit expanded trading, and they've limited up and they've limited down. So they've kind of been everywhere in between with this kind of self-quarantining, social, what's the word they used the other day? Social distancing, and all those fun things, right? Not a lot of people are going to restaurants and those kind of things, which has a big effect on the protein markets, whether it's pork, chicken, or fish, or beef, or whatever it is. So I guess, the cattle market could just be one of those things. Same with hogs too. It could just be one of those deals where it's just kind of a day-to-day thing. You live to fight another day type scenario. So I guess talk about the proteins and what you see happening there.
Well, the media is focusing on the loss of people going out to restaurants, to functions, and the lost demand for the meat that would be served at the establishments. Having said that, I went to my supermarket today, and I couldn't find any beef, couldn't find any chicken, couldn't find any pork, and I did a survey of a whole bunch of supermarkets in Florida. All the beef is gone, all the pork is gone, all the chicken is gone. So how much of the demand is really being lost here? So the market's focusing on the one segment that they can immediately see being hurt, but I'm not sure they're correctly ascertaining that just because people are staying home doesn't mean they're not going to eat chicken, beef, and pork. They may not eat. Right. They may eat different qualities. They may, but at the same time, from what I can tell, there's massive need to restock all this meat that's been consumed or purchased here in the last, let's say, week or so or two. And so is the market missing that? I think they may be underestimating what that demand looks like. That maybe there's some demand issues, but it doesn't sound like it deserves to be hitting the cattle market back to Tyson fire levels,
right?
Which is essentially where we're at. I think the market's gotten it way overdone. Way overdone.
Yeah, I feel like they've kind of got way over the top on about everything out there. I was watching Bloomberg this morning coming in. They were talking about Carnival and all the cruise lines and the airlines and everybody else, how their stocks were up like 35 or 40% from what they were the day before. And, Boeing and all these airline manufacturers and engine manufacturers, and everybody else, they were just going through the roof. It was kind of short lived. They lost it all before the day it was over, but it was funny to watch that extreme rebound. When everything's so traded by algorithms and the littlest thing kind of blows it all off. And like you said, right now, they don't know the algorithm isn't programmed to factor in just world chaos in the economic market. So it sucks.
They do not know how to handle it. That's why we're seeing the VIX go to 90. I mean, they just have no idea. Should they be buying? Should they be selling? Should they be selling? Should they be buying they should shut down the models for a little while until they can figure out what the model should be. Because I don't think they're capable of handling it right now. And so it's causing some crazy distortions. Ultimately some tremendous opportunities, but, hard to know what to do when markets are gyrating for really no reason other than big money moving around because programs have lost their way,
Right.
So that's out there, but things will calm down. Things will calm down, and the algorithms will get reattached again. I think the best thing to do right now, Casey, everyone has an opinion, and you hear tweets and social media stories and government saying all kinds of things and conflicting stories and all kinds of things. I think the two most important things to just pay attention to is China got this first.
Right.
And it's receding there first. Their markets crashed first, and their markets have started to rebound first. So I think that, their reaction and their post-reaction is really what we need to be looking at. So if you look at the Chinese stock market, it absolutely got obliterated when the lockdown took place. But the day, you can actually put your finger on the day that the virus started to recede, that day, Chinese stocks took off. You know that they're almost where they were before the virus hit in China, the stock market there. I'm looking at all the activity numbers in China. We're all starting to rise again as they're coming back online. I think that's the model because remember, we're a month delayed. The U.S. is a month delayed. Europe's a month delayed. So what does that mean? That means that we're going to start to see the virus receding sometime in early April if we follow the same timeline. The day that happens, markets are going to go nuts to the upside because the market will then have to price in restarting the global economy and all the demand that's going to come back and all the demand that's been put off is going to come rushing in to fill those supermarket shelves again to buy what they should have been buying. And so I think that the Chinese experience, and by the way, that is the Chinese experience is verified by other pandemics. The research we did shows that's how it goes. So I think that we're really close to this. We have it. We figured it out. It's no longer getting the best of us. It's going away. Oh my gosh, we've got to buy everything. It's not that far away. And so as depressing as it is, as stressful as it is for people in the ag business, in the airline business, I actually believe we're almost, that the worst is just about, it hasn't already, it's just about done. And we're really ready for the post-virus rally, which for every action is an equal and opposite reaction. It's going to be quite spectacular when we finally say this, we've put this genie back in the bottle. We're still worried. We've got to be vigilant, but it's no longer getting the best of us anymore. It's coming. And so everyone needs to keep calm, collected, and to realize that some really good opportunities to sell are coming. And it could be those prices could be higher than they would have been had we not gotten this big knockdown, which would then could cause a bigger bounce. So I do see, maybe I'm just a perpetual eternal optimist, but I actually am optimistic that prices are going to be offered over the summer to producers that will be more than acceptable. I really believe that's going to take place. So.
No, I'm kind of right there with you. Just looking forward to that. The shelves being stocked full of toilet paper again. That way we can get that thing back together.
Well, I just figured I'll use a towel and keep washing it.
Oh man, I tell you what, this world's coming to an end quick if you learn how to. You need that much toilet paper. I tell you what, goodness.
Well, and they took my northern quilt. That was stuff I really like. I couldn't find my northern quilt toilet paper.
Yeah, I know. I've heard of people buying like cases of stuff like Sam's and all this stuff. I'm like, it's toilet paper, fellas. Come on, man.
See, we're used to it down here. Every hurricane season, this happens down here. Every single hurricane season, we get one named storm, and this happens so I'm used to this, actually. We're just used to it. But everywhere else, they don't know. They're like, I've never seen this. I'm like, this happens every year now.
Right. Yeah, crazy stuff.
Yeah.
All right, Shawn, good stuff as usual. Folks want to reach out to you, pick your brain, or just see what you have to offer there at Hackett Financial. What's the best way to do that?
Our website at Hackett, Hackett, advisors.com, all kinds of information on there to see if what we do may be of value to the listeners. So.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure to check me out on my social media stuff at Moving Iron LLC on Facebook, Twitter, and Instagram. Also check out movingironllc.com for all the latest news having to do with Moving Iron Podcast and all the other stuff we have going on, as well as the Global Ag Network. Check out all the great podcasters there as well. So until next time, I'm Casey Seymour with Shawn Hackett. Don't forget your toilet paper, folks. Smooth Iron out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here.